If you have questions, leave them. I'll answer them. If you are investing in a company and there's no exit event, then there's really no way to harvest that investment or get an ROI on it. What this is doing is helping bring some financial rigor to Waymo, which kind of has had infinite money from Google. Have had a few questions from subscribers and viewers over the past few weeks. I apologize for not being able to get to them, but here are a couple of them that I will go over, which is, if Waymo is going to succeed or have a high chance of success, why would Google allow others a share of the pie? Wouldn't they keep it to themselves and not raise money from external parties, given that Google has a lot of money? They did that with YouTube and okay, so why would Google open up Waymo if it's going to be a huge success? And I think the reason why is because they're only giving such a small piece of Waymo away, maybe less than 3% of the company. It's valued at maybe $100 billion. They sold off maybe a couple $1 billion in equity. So this is a very small share. Google still has an overwhelming majority and certainly has control of the business. What this is doing, though, is helping bring some financial rigor to Waymo, which kind of has had infinite money from Google. And now it's kind of putting pressure on the management team of Waymo to say, we need to commercialize, we need to productize this, we need to get to market, we need to build a business around Waymo. So obviously the technology is valuable, but they need to get to market. They need to launch. They need to make money. So this is a great way to say, yeah, let's raise, a couple $1 billion for Waymo. We're not really ceding any power or control, but we are hopefully going to light a fire, bring in some good institutional investors that are going to help the Waymo team get to market and monetize and build a real business model around this company. Great question. Another question here from Nikhil is, investors and VCs who invest in companies for a percent, how do they earn money if the company doesn't get bought or doesn't get a higher valuation? And the answer is that, well, they probably don't make money. If you are investing in a company and there's no exit event, then there's really no way to harvest that investment or get an ROI on it. There are some alternatives that you will see, like there's a marketplace called like Second Market, which will allow, a lot of employees will use this that have shares that have vested for a while. Like for example, if you are an employee in Airbnb, a lot of people were hoping that Airbnb would have gone public in 2019 because the employees have these options and they want to be able to sell the options. Sometimes their options are expiring, so they have to sell them, right? Or Airbnb has to go public. You have to provide this liquidity. So there are other sites out there that will let you sell your investment in a company to other investors, and you're going to take a discount because there isn't an exit event, or that it's not public. There isn't a liquid market that you can sell your shares in otherwise. Now, if the company is worth less money, you might still be able to use a Second Market. It depends how big the company is. If it's a unicorn business and it was worth $5 billion and now it's worth $3 billion, there probably still is a market that you could try to sell your shares in one of these secondary marketplaces for a discount. But if it's already a small business that's a Series C or Series B stage company, it's going to be much harder to sell those shares for anything unless the business can really reach some very material scale and create a market or have investors that are interested in getting into an illiquid investment. Otherwise, that's really the only way to monetize it. You could say, are there distributions? But for tech startups, the concept of distributions it's not really going to happen. It's not a lifestyle business. This isn't a mature business that's throwing off cash, right? These companies need to hold on to their cash. So they're really not going to be making distributions. It's really just secondary market sale or it does get acquired or it does go public and you get that liquidity. Hi, this is Alex from Winner Take All. Thanks for joining us. Hope you enjoyed the content. Feel free to leave a comment, ask us questions, and definitely make sure to join us on our next live stream.